What's up, traders? Matt from the Trade Brigade here with your weekend crypto report, where as always, I do a technical analysis and give you my thoughts on the coins listed up above. One thing you might notice is that we're focusing on Ripple to start here. I don't want to make you wait until the very end of the lineup today, but do know we will be doing the full technical analysis on the quote-unquote core list of coins, so stay put. But for now, how are we going to trade this Ripple chart? Because it's really the only interesting thing taking place out there in the crypto landscape right now. Many of the things in the core list are just consolidating and going sideways, perhaps before the next leg lower. But Ripple is doing the opposite. Obviously, it's a big breakout to the upside here. And by the way, we are looking at the weekly time frame chart. So even if you don't trade crypto, here's how I would approach this from a technical standpoint. On the weekly time frame, we obviously have a double bottom. That means that we've got two touches to roughly the same area and a breakout over the neckline. That confirms this pattern is unfolding, right? We've got the new higher high. Now we're looking for the next higher low. So on the weekly time frame, a line in the sand has to be that neckline. This price of Ripple cannot come back down underneath 38 cents. Otherwise, this is just a big fake out to the upside. We're likely coming in for the equal lows. There's no big trend reversal. So from the weekly perspective, 38 cents needs to hold. But would it be reasonable to look for a pullback entry that retraces that much of the weekly bar? Probably not. Probably not, right? That is giving back far too much of the move. I would say that the sellers actually firmly took control. That would produce a large upper wick. It wouldn't be pretty. So how are we going to actually trade this? How is this going to become an actionable setup going forward? Let's drill down a time frame to the daily time frame chart here. So multiple time frame analysis, that's part of the lesson that you're hopefully getting from this analysis here of Ripple. And this can apply to anything that you're trading, right? As long as you've got a candle chart. So we've got lows. There's basically your weekly double bottom. There's the neckline, which is unironically coinciding with this prior area of support. And if we look left further, right, this was a bear flag. So there's your bear flag breakdown. Boom. We were consolidating and respecting the bottom end of that. Again, that's the neckline of the weekly pattern. So that's a significant area. What else is a significant area? Obviously, the top side of the flag, because if we look left past that, we've got thin structure from the breakdown. So knowing these things, we can now have a weekly line in the sand where, okay, on the weekly chart, I suppose if it stays above 38 cents, it's still technically in play because it's trying to find that higher low. But on the daily time frame chart, we know that in an ideal world, it probably wants to hold the top end of the prior flag from in here. So what's the number? Roughly 45 cents. We'll just round it off to make the numbers easy here. So 45 cents wants to hold. Okay, that's the first level that we're watching. Does that make sense from a Fibonacci perspective? So let's take those out. Okay, it's roughly the 50% retracement. As long as it's not greater than the 61.8, which generally produces the 100% retracement, we're golden. So, okay, if we come into this area, we've got the 50% retracement of the move coinciding as well. That's a thing of beauty. Now, are we just blindly buying this level is the next step to this entire formula? Probably not. Right? We've seen this picture happen over and over and over again in the crypto landscape where all of a sudden there's this big pump and then 100% retracement and just dribbles lower for all of eternity. So to avoid that, we need some kind of setup here. Okay, that's part number two. We've got the numbers. Now we're looking for a setup. What could a possible setup look like? Well, number one would be a very simple hammer candle that forms down here with minimal lower wick. We don't want the lower wick piercing all the way down to here and then a snappy close back up at the highs because we need that lower wick to ultimately define our risk. The lower wick is where we want to place our stop, just beneath it, right? So our entry is over the high and then we look to retarget this area here, 58 cents. Where was that 58 cents coming from? If we didn't cover it on the weekly, which I do think we actually breezed through, it's where the bear flag breakdown ultimately stemmed from. So you can see that on the daily. And if we quickly go to the weekly, and I scrunch this out a little bit, you can see, so on the daily, we had that breakdown where the bear flag started. It was also prior support from right around in here. Okay, so that's the weekly and daily target, 58 cents on the upside. All the numbers should be making sense now. None of these things should be a mystery. We have the structure, and now we're talking about setup, right? So going back to setup, if we can get a hammer candle to print down around this area with reasonable enough of a lower wick where the risk reward is still tight, stop loss can go here, entry can go here, target can be the high, because you're going to want to sort of take some profits at that high in case we run into resistance for a double top, but then hold some to see if we can make it to that 58 cent mark. Okay, so here we go. Now we start to have a trade plan around how Ripple should work. There's kind of your reward, and there's kind of your risk. That's if we get the hammer candle in the first place, because again, we've seen time and time again, a big pump and then this huge retracement. So please don't be fooled into thinking that you can just blindly buy 44 cents and expect that this is going to make it to target. If we don't get the proper structure, if this prints a large red-bodied hammer, large red-bodied candle, not a hammer, then this is not a buy, right? You've got no risk-reward setup. There's no indication that the buyers are stepping up. Okay, so this happens. It pierces a little below, then it starts to do something like this. All right, now what are we starting to build? This is setup number 2. We've got a bull pennant, bull flag, whatever you want to call it. Now you're looking for a break of any possible resistance trend line that forms. Now, obviously, we can't forecast into the future how and if this will even happen in the first place. So that is going to be up to you to do your own analysis on whether or not this is turning into a flag. But if we've got something that's consolidating reasonably above this 44 cent mark and we break a trend line, there's your entry. Now you can put a stop underneath whatever bar breaks it. Target is still up here. Risk is kind of tight, right? So that's how I would go about trading this Ripple to the upside. Do I think it's wise to just blindly jump in long here? Probably not. Wait for the pullback, wait for a reasonable setup to unfold, and then we can watch for some structure and more confidently participate in a trade, a reversal here to the upside. The volume is great. On this little pullback here, volume is starting to mute. It's not nearly as much as the prior candle in here. So that does strike me as a decent look, but one step at a time, right? So please be patient. And that is ultimately a breakdown of how I would go about trading Ripple here into the future based on this big weekly reversal that we just pointed out. So hopefully you found that useful. Now let's add in some context of the quote-unquote core list, the grandfathers of the crypto landscape. So Bitcoin is up next on the chopping block. And what do we see from a price action and structural perspective here? Obviously, we've got a range, right? This range is really comprised of 2 mini ranges. There's 1 and there's 2. We've covered this in the past. We talked about the fake break. We talked about bear flag in here. Now we're bear flagging again. So this overall move is getting more acceptance lower at the bottom end of the larger range. So all this support, now support again, is looking like it may break. Why might it break? Well, we've got a high, a lower set of highs after trapping some buyers, right? This hammer did not produce any significant upside on the breach of the wick there. You can see that actually happened on the red inverted hammer. And now we're consolidating for lower highs underneath prior structure, 19.5, right? Just as a round number there. So the further this can consolidate here, we have a touch in close proximity of time coming off of lower highs. I would argue that this is actually quite a bearish setup. If we were to go to the weekly time frame chart, and we've talked about this in the past as well, this is nothing more than a large weekly bear flag. If the weekly chart is going to flip bullish, just like the Ripple chart, it would need to take out the neckline of its double bottom, which is way up here around 21.6, right? And that does not seem to be likely as of the current price action on the daily time frame. So Bitcoin is actually quite bearish here for all of the reasons we've just pointed out. And knowing that, you might start to exercise some caution in that Ripple trade. Maybe all of a sudden, we pointed out a great trade plan, right? But if Bitcoin starts breaking down, if the crypto marketplace sees another slide to the downside, Ripple might not be the setup for you, right? So taking in the context of the entire crypto landscape will definitely be important here. So that's Bitcoin. Looks more likely that it wants to break to the downside as opposed to see a major reversal to the upside. To get bullish in Bitcoin, for me, it would definitely have to be higher lows above 20,725. Okay, where's that number coming from? Prior support, rejections, and we sliced right through it, rejected on that tiny, minuscule little hammer candle dead cat bounce, right? So a higher low above that might start to change my tone, but you can see there's quite a ways to go before we flip back to being bullish in Bitcoin. So that is that breakdown. Let's continue along through Ethereum, obviously playing catch up, so to speak, with Bitcoin, firmly underneath some of the lows, whereas Bitcoin is kind of bobbling above. But on a relative basis, right, the range in Bitcoin was this, and Bitcoin's hanging out here. Right, that would be the equivalent to these lows from late June. If we just quickly flip back to Bitcoin so I can show you, late June, equal lows. Ethereum, still technically higher lows above what we have from late June, early July, but you get the gist that this is trying to get there, right? You can see that unlike Bitcoin, which is technically, again, on a relative basis, holding up to its prior lows here, and there, right? Ethereum is clearly underneath that. So I would not look at this as like a safe haven whatsoever for finding relative strength in a massive reversal. If a reversal is going to come and Bitcoin's going to move higher, Ethereum's going to move higher, I just think that's enough positive pressure in the crypto space to maybe make that Ripple trade worth it. Okay, so that's kind of what I would look at from a relative strength perspective. Ethereum numbers, just to be paying attention to. Obviously, any rotations higher, probably looking for the rejection off of 1430. Breakdowns are underneath 1250. That would be the bring us home move, catch up to Bitcoin, and move back down to 1,000 in Ethereum, which is a psychological number as well, may act as a magnet. To the upside, to get bullish inside of Ethereum, I would want to see a higher low above 1430 and then possibly a move into the resistance trend line. And that's for a minor bullish trade. For those who are looking for the larger bullish trade to unfold, it's got to be a break of the trend line at this point in time. So from here to here is probably a little scalp, or maybe a 1 or 2 day hold, whatever it may take to get there. But that's not out of the woods, right? Obviously, we've got to break the trend line for that to take place. Continuing along, Binance Coin, you can see that this actually is interacting with the resistance trend line, but what type of structure is forming here? Inverted hammer. So this is actually a great short setup into the weekend / upcoming week. If we can take out this level to the downside, 274.50, just look for the rotation to the equal low here, and then take some profits, hold some for continuation, right? Why are we holding some? Because this is ultimately just a descending triangle. You've got lower highs coming into a equal low. If the trend is going to continue to the downside, we're just scouting that next lower low. So the breakdown of 262.50 brings you to 243. So this is a bearish setup, super resistance off of the prior structure here, coinciding with the trend line, inverted hammer, breakdown of the lows, and off we are to the races. If this is going to be bullish, right, at this point in time, I would want to see not only a break of the trend line, obviously, but probably a higher low above 301. Otherwise, we're just range bound, right? So range bound in here, equal highs, equal lows, equal highs, right? Just sideways. And, you don't really have an edge whenever you're in the midpoint of a range, which is right where we're at. So to the downside, yes, because of the lower highs coming in the grand scheme of things, but to the upside, probably not, right? This would not be a very attractive long. So that's Binance Coin. Cardano, what's going on here? Absolutely nothing. Continues to be the most boring coin I have ever seen. The range is absolutely pitiful. We're talking about less than, a cent worth of price action over the course of a few days, not a few days, but a day. Very difficult to trade. I would stay far, far away from this and only really get involved in Cardano when and if a large break starts to occur. So number one would be to the downside underneath this. It's really underneath 44 cents now. It's probably more like 43 cents. Oh, wow. We moved it a penny, right? So underneath 43 cents with confirmation, volume, big breakdown bodies, we're moving lower. And then to the upside, really nothing to do until we can breach these highs, which are way overhead at 65. So nothing to do in Cardano. Wouldn't really pay attention to that one too much. Solana is honestly getting boring here as well. So if anything, possibility for a double bottom, but still your neckline's way overhead at 37.43, so quite a ways to go for that. We've got an inverted hammer printing now off of prior structure from here. So if anything, maybe it's a short back down for the equal low, probably not a long here. Again, think about what we just discussed in terms of ranges and midpoints. You don't really have a directional edge in the midpoint other than following the larger trends, which are clearly down right now, which is why we said underneath the inverted hammer low, maybe you look for the equal low, it's lower high, so on and so forth, but it's definitely not a long in the midpoint of this range, right? So Solana, not a whole lot going on, and MATIC actually breaking underneath its big consolidation range lows. Now, granted, it snapped right back above, so could this be a look below and fail, target the top of the range eventually? Maybe. The next thing you're watching for here is, can we confirm with a higher low pullback above 74 cents, and then it's off to the races, probably to come back into this kind of structure in here, closer to 85. So about what is that, 10 cents on something that's priced around 75 cents, probably worth it to watch out for the higher low to unfold here inside of MATIC. If we were to just quickly flip to an hourly time frame chart, what we're looking at in terms of pattern is basically inverted head and shoulders, right? So either this hourly bull flag breaks out and then we're off to the races to that 85 cents, or we get further, a little bit lower towards that 74 cents, so a fake breakdown of the bull flag, and then a reversal back higher. If the buy setup is there, look for very similar things to what we just discussed in Ripple, right? Then it might be on the table for a long back up towards that 85 cents. So that is ultimately a breakdown of the crypto space. Hopefully you found the insight into how we think about things on the Ripple chart insightful. If you did, let me know down below in the comments section. If you think this whole thing was a waste of time, you can let me know down there as well. I'm always open and willing to receive some feedback. So with that being said, I thank you all for tuning in. I hope you have a great trading week upcoming. I hope you enjoy your weekend, and I'll see you soon in the weekly watch list.